All right, so let's talk about income. What is included in income? So we looked at the gross receipts on that Schedule C. This would include direct sales to customers, work performed for other businesses as an independent contractor, amounts reported to the taxpayer on a Form W-2 as a statutory employee. Now, we haven't really talked about statutory employees. They are a special category of employee. They do get a W-2. The employer does withhold taxes, but they get to deduct expenses from their W-2 income. Most of us who receive W-2s don't get to deduct expenses that are related to our W-2 work. But if you are a statutory employee, and we'll talk about specifically what a statutory employee is here, then you do, and you would report it on a Schedule C. So in most cases though, we're talking about individuals who are providing services to others or small businesses that are owned by one person that are selling items, okay? So here we have an example. Jason has a drywall business. He contracts with various general contractors to complete drywall work during the construction of numerous personal residences. So in this case, he's not being paid by the homeowners. He is offering his service to other contractors so that those other contractors don't have to hire employees or don't have to do the work themselves. They just hire Jason to do that. He is paid directly by the contractors, but is not an employee of any one contractor because he is offering the service to multiple other businesses, right? He reports the proceeds from his work on Schedule C, again, assuming it's not incorporated. If he worked for only one contractor, he would be considered an employee, most likely. But because he doesn't, he offers his services to multiple other contractors, he is a Schedule C worker. The business that is paying him would report, as long as it's over $600 during the year, they would report the amount that they paid him on what's called a 1099 NEC, NEC standing for non-employee compensation. So any income reported on this form would be then reported on a Schedule C, and therefore would be subject to self-employment taxes, Social Security and Medicare taxes. So you can see there's a spot here for non-employee compensation. There's a spot for federal income tax withheld. Now normally there wouldn't be anything there, right? It happens that contractors will have amounts withheld. It's not as common. One of the conditions that would cause a payer to withhold income tax is if they hire a contractor and the contractor does not provide the company with the contractor's Social Security number. They have to fill out, when you're a contractor, you're supposed to fill out what's called a W-9 form. It's like a W-4 form, but for contractors. And that W-9 form provides information to the payer about what your name is, what your Social Security number is, what your address is, and all of that good stuff. It's a very simple form, and companies are supposed to obtain these from contractors before the contractor starts work. However, sometimes that doesn't happen, and you can get to the end of the year and find out that you didn't have one. Companies can get in trouble for not collecting those W-9 forms and because the IRS wants to know. They want to know who you've paid because they're going to go after their tax money from that person, right? But this is pretty simple. It used to be a 1099 miscellaneous form, MISC, but the MISC form included other types of income that was not subject to self-employment tax. So it wasn't subject to Social Security and Medicare tax, and so it became rather confusing because it also had rent income on it and just other types of income. So they took that out, made a separate form, which I think was good that they have a separate form for it, because you know right away, okay, this is self-employment income. You don't have to try and figure out if it's self-employment income. So here we've got Jake is an accounting systems professor at State University. also has a consulting business on the side. He performs accounting systems analysis for local industries. So he consulted with 5 different companies and received 5 Form 1099 NECs. Each of them reported $2,500. So he worked for 5 different companies. In total, they paid him $12,500, but each of them paid $2,500. So he would have received 5 of those forms with $2,500 on each of those. In addition to the W-2 from State University, which he would report on line 1, directly on the 1040, he also would report on Schedule C, $12,500. He's going to add all of that together and put it on the first page in that part 1 of in the income section of the Schedule C. The wages and the trade or business income do not get combined together because they're different types of income. Those wages have already been subject to Social Security and Medicare tax through the employer, right, and have had those amounts withheld. This income, Jake is going to have to pay those Social Security and Medicare taxes separately. So that's why they're 2 different types of income, so they are reported separately, even though we worked for both of them, right? Let's see. So actually, this is a good one to mention. Does the amount reported on line 1 of Schedule C always match the Form 1099 NECs that are received by the taxpayer? No, because the only time that a payer is required to send those 1099 NECs out is if the total amount for the year exceeds $600. Well, if you had a bunch of jobs where different businesses paid you $500 each, they're not required to send you out one of these forms, but you still had the income. You're still required to report the income. So the amount on the Schedule C can be larger than the total of the 1099 NECs. It should never be smaller though, because if it's smaller, you're not reporting that income, and the IRS they know, right? So it can be different. Or if you've got a small business and you're selling directly to customers, those customers aren't going to send you out a 1099, even if they spent more than. The only businesses have to report the 1099 NECs. Individuals don't have to fill those out, right? So if you're as a customer, you go in and spend $1,000 on a computer, you don't then send the seller a 1099 NEC for that computer, right? Because you're not a business, right? And because you're buying a product. So that's another story. So statutory employees. Statutory employees would include full-time life insurance agents, certain agents or commission drivers, traveling salespersons, and certain work-at-home individuals. So they're very specific classifications of work. They're only, if you're preparing tax returns, you do not have to determine whether somebody is a statutory employee. It will be indicated on the W-2. Okay. The payroll department might have to determine whether somebody is a statutory employee, but as a tax preparer, you don't have to make that determination. But the statutory employees kind of get the best of both worlds. They actually get to reduce their gross income by the amount of expenses that they have, even though they're employees. Employees, you and I, unless you're a statutory employee, we don't get to do that. So if I go out and I buy some books because I want to use them in one of my classes, and I don't get reimbursed by my employer, I don't get to deduct the cost of those books because I am a W-2 employee. But if I am contracted, like say I get hired to teach a class but as a contractor, I don't know that would ever be the case, but maybe there's some circumstances out there, and I purchase those books, then I do get to deduct the cost of those books from my taxes. Statutory employees, though, are W-2 employees, and they get to deduct those costs. like I said, it's kind of the best of both worlds, because if you're a self-employed individual, remember from payroll accounting, you're paying both halves of Social Security and Medicare tax. If you're a W-2 employee, you're paying half of it, right? Yeah.
So in your example where you said you were a teacher buying books for a class, would that be different from an educator's expense?
Yes, because I'm not a K through 12 educator.
Oh, okay.
Yeah, so that wouldn't, yeah. If you are, in that case, if you are a K through 12, you might be able to take a deduction for that, but you're gonna be limited to the $300, right? Yeah, but you have to meet that qualification of being the K through 12 educator. But just kind of an example of, it's the best of both worlds, those statutory employees. Okay, so cost of goods sold. So if inventory is a material, and we're gonna do a little bit more research on that. Inventory must be accounted for at the beginning and the end of each tax year. So, I mean, you're familiar with this calculation. Beginning inventory purchases, cost of labor minus our ending inventory equals the cost of our goods sold. That then gets transferred. So that's on the second page of the Schedule C. That gets transferred over to Part 1 and reduces our gross profit. Okay. Let's see. Question?